This is Dr. Duru from Ahan Analytics with the market breadth. All right, let's jump right into what happened in the stock market this week and think about what could happen next week and in coming weeks. I'm going to start this time with my favorite stock scanning service, Swing Trade Bot. As many of you should know by now, I am a big fan. I am a subscriber. The ROI on this thing is absolutely tremendous. And I'm using this just to show just how bullish of a day we had. In case you were sleeping under a rock, today, August 22nd, and it's after the market close. Jay Powell, Federal Chair Jerome Powell, otherwise known as Jay Powell, made his um, speech at the annual Federal Reserve confab at Jackson Hole. And he pretty much gave the market what it wanted to hear. Maybe not everything, but certainly enough to trigger an immense bullish response today. So let's take a look at just how bullish things were. You could see an oddity in that all of the trends, short, mid, and long term, are up, except the NASDAQ is flat. And when we look at the charts, you'll see why that is. But this is one of the things that was just incredible to me when I was looking through this. Absolutely no new lows today. That stunned me. I don't think I've ever seen this happen before on a trading day, that there were absolutely no new lows. And this is still a day when there were a few bearish signals from the technical scans. Advancers versus decliners, of course, completely overwhelmed. That's another um, very bullish signal. We continue down here. You can see that the top five technical signals for the day are all bullish. Um, you can argue whether closing a gap down is bullish or not, but this is something I definitely want to look at. This is a great feature that's been rolled out with Swing Trade Bot recently, which is tracking the closing of gaps, whether they're up or down. And then you can see the unusually active signals for the day also are all bullish. If in case you're not getting it, you pretty much can't get a more bullish day than today. Okay, let's take a look, jump into the charts. Actually, let's start with market breadth. Now, last week I talked about how the bulls, I think it was a week ago, yeah, the bulls pretty much repaired the damage in market breadth and closed the what I was calling the bearish divergence with the S&P 500 and the major indices. Well, the bulls not only followed through on this, but they almost pushed my favorite technical indicator, the percentage of stocks trading above 50-day moving average, what I like to call AT50, almost push it right back to the overbought line. So the bulls are in full control. Today, I consider to be an outstanding confirmation of the underlying buyer's bias. And I also don't think I've ever seen market breadth expand this fast, this strongly before, particularly not this high up and close to the overbought threshold. So this was very stunning to me, but it's again the best indicator that I have that this day was extremely bullish underneath the covers and above the covers. All right, let's take a look at AT200, which is the percentage of stocks trading above their 200-day moving averages, and this is the icing on the cake. All right, so I like to call this AT200. It soared 7 percentage points to 61.3%. And let's follow this line along to see when was the last time it was this high. It was last this high back in December. So now it's at a new year. It's a new high of the year. It's well above its level when the S&P 500 last hit all-time highs earlier this year. This is absolutely incredible to see. This is another outstanding validation of the bullish bias in the market. Now, this is a strongly bullish day. It doesn't mean that Monday, next Tuesday are going to be up days. It just means that the general trend is still up and the buying interest in this market is still strong. Of course, you can still go day to day with pullbacks and sell-offs. Um, and of course, we are still in the seasonally weak period of the year where drawdowns tend to be bigger than other times in the year. That's this month, August. We saw that at the very beginning of the month. September and October. Okay, so let's just keep that in mind, even as we're recognizing just how strongly bullish this market is. Okay, let's jump into the indices because I have more fascinating charts to show here. Let's switch over to logarithmic. S&P 500. Now, we had a very bullish day, but the S&P 500 did not quite make a new all-time high. Actually, wait. Oh, yeah, it did make a new all-time high just by the skin of its teeth, by a few dollars, few dollars or a few points, however you want to say it. But the most important thing to notice, and let me just zoom in here a little bit, is that once again, the 20-day moving average held as general support. It wasn't perfect, it wasn't picture perfect, but still, this 1.5% gain in the S&P 500 notched a new all-time high. And you can see, given the distance from the upper Bollinger Band, which is this black line, there's now room. The runway is clear for yet more gains. Again, it doesn't mean the gains are guaranteed. It just means that the odds favor more gains ahead. Okay. And then for the NASDAQ, we have something. I'll show you here why the trend is still flat short term, because the NASDAQ is actually now suddenly lagging the S&P 500. It also outperformed the S&P 500 with a 1.9% gain. You could see its 20-day moving average support really did fail yesterday, Thursday, and it's just short of the all-time high. So the short-term trend is going to be flat. And this is because we had a week where the big cap tech stocks were sold off. It was a huge fake out move in terms of interpreting that as something important for the overall market, but it did weigh particularly heavy on the NASDAQ. Now, here is my favorite of the three major indices, IWM, iShares Russell 2000 ETF. It soared an astounding 3.9%. It's a new high of the year. In fact, let's see when it was last this high, back in December. So that matches market breadth, AT50. Um, and look at this perfect technical stair step move. I mean, it bounced right off of the 20-day moving average. And just like the last big surge, I did not quite play this one right. And I left a lot of money on the table. Last time I barely made any money. This time I actually made a decent amount, but I still left a whole lot of money on the table. I went into today, Friday, with call options at the 230 level. And I thought, oh, well, the best that's going to happen is that IWM is probably going to just surge into 230 and my call options will just expire worthless. So I rolled into a 230 call options for next week. And that was right before Jay Powell started talking. And then IWM took off. I took some profits about halfway up, thinking that, 2% gain or whatever is sufficient on IWM. And of course, it just kept soaring. I think that's the rough way that things played out. I don't quite remember just so accurately. But anyway, main point is that the big market breadth story is IWM, the small caps have surged again, new high for the year. And I expect this trend to just continue. IWM has finally truly turned the corner. Notice how it's leaving behind now. It's 200-day moving average and the 50-day moving average. Again, this doesn't mean there won't be pullbacks. And in fact, I want pullbacks because I want chances to keep buying call options to sell on the next rallies. But anyway, even if it doesn't pull back ever again forever, I still have a large core position in IWM, which is benefiting from this bullish turn. Okay, let's take a look at individual stocks. I'm going to focus this time on stocks and ETFs that I traded or want to trade. So remember, I'm only providing this for educational purposes. Please trade and invest according to your own risk preferences and risk tolerances and according to your own time horizon. So I'm just talking about what I've done and what I plan to do. So I've been writing and writing both on my blog and on Seeking Alpha about the bearish to bullish turn in the home builders. I think now the home builders are fully bullish. The bearish to bullish turn has finished and now it's bullish. Even though it's still well below the all-time highs, it's going to be stretching there. Now that the Fed is promising likely interest rate cuts, interest rate sensitive sectors are going to benefit, and home builders are big beneficiaries. So ITB soared 5.3% today. I think there's a new high for the year. Yes, it's not just a new high for the year. Guess what? It's the highest point it's been since, you guessed it, December. So this was a great move for me today, and it's a great validation of the technicals that I've been identifying, even as the housing market data is still pretty bad. It has barely gotten any better. In fact, in some ways, it's gotten worse, but the market is anticipating better days ahead. Here's what a big miss that I had, which was Caterpillar. This is an industrial stock. This is an example of a sector of a stock in a sector that's going to benefit a lot from interest rate cuts and a weaker dollar because of their sales internationally. Caterpillar soared 4.3% today. It did not quite match a new all-time high, but I'm going to expect it to get there at some point. So I usually like to buy Caterpillar puts as hedges on my bullish positions, but in this spot, I don't see any reason to bother hedging with Caterpillar puts. It is fully bullish right now. Okay, so another one was retail stocks reported today. So just take a quick look. Target disappointed, and I have a decent sized position in Target. But I took some kind of solace in the fact that it did not crash all the way below the previous lows of the year. Sure, it lost 6% today, but it held the intraday low, and even today it responded to the bullish market. Now, it did fade sharply from 50-day moving average resistance, that red line there, but overall, Target Corporation, ticker symbol TGT, is a potential. It's not quite the bearish to bullish turn is now over. It's now more in a sideways pattern because it disappointed in earnings, but it's one that I'm going to continue to hold just to see what happens. 4% dividend yield, so I am going to get paid to wait. Now, on the other hand, we had TJ Maxx, which is the kind of retail stock I wish I was in over the long term. Now, it did do a gap and crap post earnings, so I think it was up as much as 6-7% and then faded to a 2.7% post earnings gain. TJX companies, as you may know them as Home Goods and TJ Maxx, ticker symbol TJX, made a new all-time high. I think this is a new all-time high. Yes, new all-time high. But sellers are weighing in on the stock and look like they want to close this gap. So that's something to take an interest in. It could be people selling their winners. So I'm a little wary about a stock that gapped in crap post earnings and could not generate or hold buyer interest on a huge bullish day. Walmart is a similar thing. In fact, Walmart sold off post earnings yesterday, 4.5%, and then sellers continue to push it down lower. So this is a warning sign. And there's going to be a dual narrative. The Fed is cutting rates because it sees it's finally acknowledged some economic weakness, particularly in the labor market. So that's great for the stocks, for a lot of stocks that interest rates cuts are coming, but the fact that the economy may be weakening is not good for a whole bunch of other stocks like retailers. So there's going to be this push and pull tug. There's going to be this tug of war going on with these dual narratives as to which one's going to dominate. Are rate cuts going to be big enough and soon enough to save the day? Or are we going to see economic weakness pretty much wash over things first before the impact of the rate cuts kick in to give a jump start to the economy? So that's something that I will be watching very closely and I will write about. So speaking of retail or consumer stocks, discretionary in particular, I had been sitting on JM Smucker Company. I bought it for its dividends. I held through this big crash, 15.6%. I almost got back to even, and I thought, why am I sitting in this lagging stock? You can see it's well off its all-time high. This is a raging bull market. It doesn't make sense to be sitting around in stocks like this. So I looked around for something adjacent to this, and I stumbled upon, oh, sorry, JM Smucker Company, ticker symbol SJM. It broke out above the 200-day moving average, so technically it's bullish, but it's just such a laggard. I wanted to move on. I found something great, which was Archer Daniels Midland Company. They're a big agricultural processing, you know, um, type company. So think of it as further upstream in terms of the food chain. And I love the way that it responded well to its earnings, 6% gain, and it's continued to go higher. So I bought it earlier in the week, and I'm heartened and validated, I think, to see that it responded to today's bullish day with a 3% gain. ADM also has a dividend yield, so it was a great swap to sell my SJM for a small loss and then buy with that with those funds ADM. So this is what I'm hoping to ride over the long term. Okay, let's keep it moving. JHX is an interesting one. This caught my eye. This is a siding company. And it caught my eye because it threatened to undermine some of my bearish to bullish technical observations about the home builders. If a siding company is reporting earnings so bad that it crashes 34%, maybe there's something wrong. In fact, it made a new low for the year. And in fact, it made a new low for the last 2 years. And you could see it made this huge double top essentially over the long term. So this is a stock that's not really investable for the long term, maybe for trades, but you could see it did respond. Buyers have stepped in, and now today it jumped 3.7% for a new post earnings high. So this could be one for a trade. I'm going to keep an eye on it and see. I would have to have a very tight stop on this because there's no telling when sellers might be interested again. This is James Hardy Industries, ticker symbol JHX. Okay, Intuit had a unfortunate timing. It reported earnings and dropped 5% post earnings. Intuit is ticker symbol INTU. The good news for Intuit is that it held just below the 200-day moving average support. It's, of course, now resistance, but at least it's close by. If it closes one notch higher, I would consider it at least for a trade to close the gap, if not to run back up to its 50-day moving average resistance. Okay. I knew that Zoom Communications, ticker symbol ZM, was reporting earnings. I did not dare to buy it because I kind of given up that buyers are going to be interested in Zoom ever anymore. You can see here, well off the bubble highs from 2021, 2020. And ever since the lows of the bear market, it continued to trickle lower. And it's finally seen some life since the end of last year. But I really I really got discouraged because it didn't continue any momentum. So note that it's still, let's see, I think on today's close, it's just now flat for the year again. It went up 12.7% post earnings. This is Zoom Communications, ticker symbol ZM. It it's back in a bullish position. It's above the 50-day and the 200-day moving average, but it's well extended above the upper Bollinger Band. So I would love to buy it here, but it's overextended. It's right below the previous high. It's just too much downside risk to jumping in here. But I am gonna keep watching it because I'm still looking for that signal that I can just buy and hold this one, and that the previous momentum is actually starting to pick up again, which is what I would love to see for Zoom after being so skeptical for so long during the bubble. Okay, so now an example of some of the big cap laggards. Look at Microsoft. It had a gap and crap post earnings, and buyers have just barely been interested ever since. Post earnings, Microsoft gained, let's see, what is this? It gained 4% after being, I think, as high as 8%. So that's a gap and crap post earnings move. The sellers eventually closed the entire gap. That was earlier this week, I think. And now Microsoft is clinging to 50-day moving average support. This is part of what's weighing on the NASDAQ. I went ahead and took a risk. I bought some call options, I think at the 520 strike that expire next Friday. I'm just dipping my toe in there to see what will happen. But Microsoft is still in my basket of generative AI plays, so that's why I keep an eye on Microsoft, and I'm looking for a bounce off of here, at least back to the 20-day moving average resistance. But beyond that, of course, is what I really want to target. Okay, let's keep moving. I forgot there's another consumer related stock. This one is interesting, particularly with all of the pressure that MasterCard had, ticker symbol MA, with the companies that are moving into doing stablecoin payments. And MasterCard came out with its own partnerships, and it had a lackluster post earnings move. But today it moved on to a new all-time high. Let's just confirm that. Yeah, new all-time high. So as far as the investors in MasterCard are concerned, there's nothing wrong with consumer spending, nothing wrong with the threat from crypto payments. It is just continued. If you actually take a step back, you can see it's just kind of rallied through this step by step by step in small steps. But this is still one to keep an eye on because Visa is not so fortunate. It still is lagging. And I don't really know what the difference is between MasterCard and Visa in terms of how investors view them, whether it's valuation or what have you. But Visa has a lot of catching up to do for MasterCard, and Visa's ticker symbol V. All right, so back to tech. Here's one that I bought today. Broadcom, which is ticker symbol AVGO. You can see here it held the 50-day moving average support on Wednesday. It bounced picture perfect off of it, but it was not really a buy because on Thursday it had some more weakness. And then Friday today, I thought, particularly given such a bullish day, I went ahead and took a chance and bought a call spread on AVGO before seeing whether it could close above um, that hammer high, intraday high. So you could see here, let me zoom in. It did get to the 20-day moving average, but then it faded off of that as if it's resistance. So my position there's kind of a yellow flag on that position. It's kind of in trouble already. So I'm really going to be eager next week to see AVGO close above that 20-day moving average to validate the bullish read that I have on the technicals. And of course, AVGO is a big participant in the AI trade. And so if this technical setup fails, it means that the whole AI trade may be under question, short term at least. Shopify is another one, a great technical setup that I got into, ticker symbol SHOP. You can see here it had a monster move post earnings, 22% up 22%, but then sellers just started taking profits and they never stopped taking profits until, look at that, magically the stock tested 20-day moving average uptrending support. And today it did respond to the big bullish day today with a 4% gain. So I jumped into this one. I wanted shares. It didn't quite get to my price, but I did get in with a calendar call spread at the $150 strike. So I am looking for this one to continue rallying. One stock that I just missed, because I didn't quite get my price. I know I shouldn't be so picky, but I am, just given the amount of risk in the August, September, and October period. SoundHound AI, it just like Shopify had a great post-earnings move. In fact, more that so than Shopify, buyers actually continued buying. So it didn't stop at this 26% post-earnings gain. It gained the next day 17%. So this looked like a major validation of the stock, and it looked ready to go challenge its former all-time high set last year, December. But sellers decided to take profits, and it went down straight. What is this, 5 days straight until today's big bullish day. So I had it on my buy list to buy it, I think at $12.45. It didn't quite touch that point. So now I'll still have it on my buying list. I'm going to have to chase it a little bit if it goes above the 20-day moving average, which right now is it's at 1278. Okay. So that's one that's on my buying list. Another stock that I did buy today because of the technical setup is Cloudflare. I have been hawking this stock ever since they announced that they are creating a platform for helping publishers to either block AI scraping or to charge AI scrapers who want data from the website. I think this is a great business model that will soon be replicated, and I'm glad Cloudflare, ticker symbol NET, is ahead of the game. So the trade here for me was that it wasn't picture perfect, but it did hold 50-day moving average support after this pullback. It's now below where it was right before earnings, so that's a yellow flag on this. Um, and I'll just see what happens. I am long-term bullish on Cloudflare, so it's going to take a lot to shake me out of this one. I would love to load up on more shares at lower prices, but this technical setup looks pretty decent, and I'm not expecting lower prices anytime soon. All right, so last stock. Yeah, this is the last stock. Gold. So you'd think on a day like this when the Fed is promising rate cuts and the market is in bullish position and rates and interest rates are coming down, you think that gold would break out. Well, it did have a good day. GLD, sorry, ticker symbol GLD was up 1.1% today, but it's still stuck in this what's now a 4 month consolidation period. Some of you might see a triangle or wedge pattern developing where pressure is building for a breakout. So surprisingly, gold has just been kind of idling around. And basically now it's pivoting around its 20-day moving average and 50-day moving average. I have a calendar call position at the 308 strike. I've already flipped. Let's see, don't quote me on this, but I think my long side is expiring in January, and I have flipped now several other shorter term short calls at the 308 strike. So right now I'm back in full with a short 308 strike that I think expires next Friday. And I think after that, if it expires worthless, I think after that, I might just call this trade um, a quit, or I might just go ahead and just do a standard call spread and just sit back and wait this pattern out. But anyway, those are the charts for today. As you noticed, today I had a more of an emphasis on the latest trades that I made and a few positions that I have. Hopefully that was educational for you. As always, go ahead and subscribe to this channel if you want to get this content in a timely fashion. Click the like or share button so the algorithm knows what's up. And if you have any comments or feedback, put them down below. Once again, as always, thanks for checking this out, and I will see you next week. And don't forget, on my blog, drduru.com/122 is where I write more content with more details. Take it easy.